how you invest in going into 2011, particularly with the banking sector. Everybody has said valuations, it's cheap. How aggressive do you get starting the year?
Well, thank you very much. We are still very bullish on this market for 2011, but we are still cautious. There are two key risk factors for us. One is the election that we expect to happen in April, because that tells us the direction of which the macro is going to take, which also have an effect on both the market and the banking sector.
So you'll be conservative starting the year?
Yes, starting the year. And also, since we expect that AMCON has stated that probably by the end of Q2 next year, that's the half year, they will have finalized on all the M&As and all the stability they are doing in the bank. So it's until after that period, that after the election, after AMCON has finally done what they are planning to do by the mid-year 2011, that we begin to see the clear sense as to where the industry is going. But overall, we still believe that the market will do well next year.
So M&A ending in the first half of next year, is that a catalyst for this market? Strong catalyst in your view?
It would be, because now there's so much uncertainty, and in a market that there's uncertainty, there is a little to which you can predict what's going to happen, and everybody is cautious. You're just waiting to see, all right, let's see where this thing is going. But by that time, it will be clear to us to know which banks are doing deal, the shape of the industry will come out to fall, and everybody will be able to predict this is where we see the industry going. But overall, even as at now, we still believe that the banking sector will do well next year. Even with the crisis we experienced in 2010, we still found out that deposit grew like 15% average for the whole sector. We found out that loan, even when they said they are not broken loans, still grew like 9%, even by the time you check what they've done at the end of Q3, and we still see a lot of improvement on that. One thing that was challenging in 2010 was that the banks found it very hard or challenging to grow their top lines due to what happened, the lull in the economy. They couldn't grow their credit to the private sector. But going from the level they've operated in 2010, we see at least 10% upside, even on the gross earning side. So when you're talking of top line, we actually foresee that next year, even with the election factoring AMCON, we believe that the banks will be able to grow the top line, let's say, like 10%, and we also forecast that the bottom line will grow, let's say, 15% next year.
Let's focus on some news flow today concerning the bank's exposure to the bond market.
Okay.
Said that the banks account for about 60% of the total outstanding FGM bonds, and given the strong change, the correction in bond prices recently this year, we've seen yields move up from 7% to 14% for the 20-year. Banks are exposed to huge losses, aren't they? And if that is the case, what impact do you think is going to have on earnings into next year?
Well, it depends on what decision the banks want to take. For the best of what I know, I'm not sure they're not mandated to mark to market. Now, if it's bond that you want to hold to maturity, definitely all you're looking at now is just the paper loss. But if you're looking at what's going to happen next year, say on the back of the bonds that you expect AMCON to issue next year, that may further depress the prices of bonds. If you want to get out of that position, I would say it may be wise, because no matter how, even if it's only 500 billion they are doing in the whole of 2011, it's still going to have an impact. And where is the liquidity going to come from to absorb those bonds? So the prices may still go down. So it will just come in the forth of what we call short selling. Like, you know that this thing will still go down, but it's better for you to stop your loss.
So it's not a major risk in your view?
It's not a major risk, because the composition, the last analysis that we did, only like 10% of their balance sheet is actually exposed, and not even all the banks. Some even have like less than 3-4%, while some have like 15%. So it's not really a major risk for all the banks.